Investors and traders, welcome to the channel. Today is 14th of April 2024. Hope everyone is having a great weekend. In this video, we are going to take a look at the key US tech stocks for this video segment. It's been a while that we have done one of these, so one is overdue, and I'll try to take a look at as many as possible. This video is for educational purposes only. It's not a financial advice. With that, let's start. So we'll start with Tesla. So this is the weekly chart of Tesla stock, and here one of the key things that we had been watching for is this channel formation right here. And the Tesla stock has been under a lot of pressure since the beginning of 2024. The stock appears to be moving in this channel formation right here. We have had a number of supports which had come in mostly on the daily channel, daily time frame. We were watching those. Those did provide support, but resistance overcame them. And the one that we had been actually watching for is this one, which is in this yellow formation. It's the 1-to-1 price projection ABCD, right at the bottom of this channel as well. And this is the level which seems to or appears to be holding for now, at least since the 11th of March 2024. So it's been there since 1 month, a little over 1 month now. I believe that's probably a good sign. So there is some consolidation that is taking place. With this pattern completed, which we'll take a deeper look at on the daily chart, there is a fair amount of support that is around here. Maybe it could be argued it might in fact be a double bottom here, but again the stock needs to rally more from here and take certain key levels out to the upside for the price action to be more positive for the stock. Now moving down to the daily chart, this is our larger ABCD 1-to-1 price projection right here, which came in around $160 per share level. And what we have seen is this kind of a price action where it's just there is accumulation or some sort of the selling pressure dying down at least. And something really key to watch is this 38.2% retracement of this swing high to low around here, which comes in around $177 per share. But in my opinion, if it is able to get above this swing high of 185, then the chances are that the stock has actually overcome a lot of selling pressure and probably could make a move higher, at least to this bigger 38.2% retracement, which comes around the $200 per share mark. And getting above this would be, in my opinion, a sign of strength for the stock. So shorter term, we are watching about $185 per share level. That will be a pretty good sign that maybe this double bottom is holding around here, around this key level. And then we could be actually looking at $200 per share level. And once it begins to get above that, that's gonna be a more indication that we might have seen a pretty good bottom for the stock to come in. Now on the flip side, if we have this $160 per share level actually broken the downside, then we have another ABCD of this ABCD. I have not drawn that. That could in fact go and see this stock testing the bottom of this trading range, if we were to call it a pretty big trading range. So this is where this breakout happened. It could go and actually challenge the around $110, $105 per share. That possibility remains there. Again, a lot depends upon the price action and these key levels that we have mentioned for the Tesla stock. Let's take a look at Apple. So I'm gonna move to the weekly chart, then we'll come down to the daily chart. Here we go. So this is the weekly chart for Apple. Let me actually blow it up so it's easier to see. Here we go. So Apple has done something last week which is really important to talk about. And this shaded region in this blue cyan color is the region that we were watching for quite some time, with $170 per share level coming in as a pretty strong support level, because on the daily chart, shorter term, it was also the 1.618 expansion. So a number of things were coming down here, and the stock just went sideways for a number of weeks, 1, 2, 3, 4, 5, and it was the 6th week last week, and we had a strong move to the upside. It would also be argued that this is a double bottom formation as well. So we have structural support around here, and then a lot of consolidation, and now pretty strong candle on the weekly chart. It could have been better because there is a wick onto the bottom, there's a wick at the top as well, and had there been no wick at the top, it would have been a much stronger candle as well. So the important thing is this has come in at a key level of around $170 per share level that we were watching, and here one of the key things is we are watching about $180 per share level. So let me actually mark it like this. Here we go. So that's the 38.2% retracement of this high to this low. If the market is able to get above this $181 per share level, roughly speaking, then there is a chance, well, it's going to be an early indication that perhaps this might have been a kind of a low, which might in fact be a cycle low. Where it began from here, 3rd of January 2023, and we could be looking at maybe $220 to even as high as $237, roughly $240 per share level for this stock. But again, price needs to do quite a lot of work, improve its momentum, get above the 185 is roughly where the 20-week moving average is. And then we could then begin to take a look at some of the higher targets, but shorter term it does appear if it is able to break above these key levels, maybe 220 and beyond might be a possible target from a price action perspective. So here we go. This is the week, this is the daily chart, and this is the level that we are watching. 1.618 expansion of this entire swing, this low to this high, comes around $170 per share level, and this is what we are watching. And we also had this concept of symmetry that we were watching, and it was also pointing around this region. So we had a number of confluence of number of things coming together, and this is why $170 per share level in our opinion was really important, and it was very close to this bottom formation around here as well. So again, watching for about $180 per share level. If the market is able to get above that, that's going to be a pretty positive sign. On the daily chart, shorter term, just the expansion of this range comes around $208 per share level, and above that if we have $220 per share level. But this is shorter term target. If it's able to break above these $180 per share level, and as high as at $220 on the daily chart, and beyond that on the weekly if that ABCD is in play. So we'll have to wait and watch further for the price action in the stock of Apple. And now let's take a look at Amazon. Here we go. So this is the weekly chart of Amazon, and the key thing to watch is that there's a potential for a not just a double top, but in fact a triple top, because from the bottom of the range it's gone to the top of the range, and this is a kind of a stock which really likes to do double tops and double bottoms. It's just fantastic in doing that, and after forming a double bottom around here, COVID lows, testing it, now it's gone and tested these highs which came in after the COVID lows were in place. Now the interesting part is to see that it has come in an ABCD formation around here, and if there is gonna be a pullback, we could expect perhaps a pullback to happen, which could take this stock down here. And in terms of retracement, here we go. If we just try to take a look at it, yeah, that's just exactly the 38.2% retracement. So there's a possibility the stock could actually pull back about $20, $20, and that's gonna be a fairly normal kind of correction. And this is what we have already seen is structure A, B, C, D, and once it gets there, if it is breaking down, then of course there is further correction that might be in place, which could in fact see stock move further lower, maybe into the 130s. but for now we're just going to go with the information that we see possible. If this is going to be a fairly large amount of resistance because of the stopping formation around here, then we could expect a pullback to be around of this much, because we have seen this in the past for the stock, and that goes right to the 38.2%. So $160 per share level roughly is possible in terms of a pullback for Amazon. Now let's take a look at Shop. This is the Shopify stock. So here the Shopify is, you can see from a price action perspective, it's a very different price action from compared to Amazon. Shopify is also in e-commerce, but it's more like a website or a shopping cart, which provides a lot of functionality for someone to really quickly create an e-commerce website, which a lot of packages or integrations available. And then one has to pay for all of those, of course. And here what we were really watching for was about $80 with 38.2% retracement, with the possibility of about $100 per share level, because we had this ABCD completing slightly above that. But what we have seen for the stock to do is find a great amount of resistance, and it's just drifting lower. So one of the things that we can do is look at a previous retracement, and we just try to get the concept of market symmetry. So if there's a pullback, it could pull back a little bit further to maybe about $65 per share. So that's about $5 from where the stock is trading right now. And if we were to draw some retracements, so there we go. Yeah, that's gonna be 61.8% retracement, which comes around 60. And then if we were to draw it from the lows around here, and then we'll also have the 38.2% retracement coming around 65. So the area to watch is between $60 and $65 for this stock. 62, yeah, about $62 to $65 per share level. And that could in fact be a strong support level for the stock. Now if the stock begins to move below that, there's actually one little thing that I've not done. Let me try doing that right now, and let me change the color as well, and we just do the ABCD. Yeah, there we go. So yeah, in my opinion, this $65 to $62 per share level is pretty strong support. Let me actually highlight it using this shaded area. There we go. And then of course the other leg. Here we go. That's where we are thinking the stock might actually find pretty good support. We have a number of things coming together: symmetry, 38.2% and 61.8% Fibonacci retracement, plus we have the ABCD. So let me actually write it down here so that we remember. So confluence, which is 0.382 plus 0.618 retracement, and then we also have ABCD, and plus we have the I'm just gonna write MKD for market, for symmetry. Let me make it a little bit smaller so that it's easily it can fit in here. Yeah, there we go. So when we do our analysis next time, we'll have this information here, and we can just judge it against that. Now this is a weekly chart, so it could take a few weeks for this formation to happen, so we have to be patient. We have already seen a one ABCD correction that took place around here. Let me actually draw it for you. In the past, this is where we are also getting the market symmetry concept. So let's take this, and there we go. So that was our ABCD. So that did a pretty nice amount of work for us, and just the highs, they were shy of 50%, but in terms of expansion, so here we go. Yeah, that was actually a 1.618 expansion of this swing right here. Pretty close to also the 38.2% retracement. So again, watching this, if this level fails, then the chances are that this was just a corrective move, and the failure of this support could see these lows of 30th of October 2023 being retested again. So that changed quite a few things, in my opinion. So again, really important to watch for $62 to $65 per share for the Shopify stock. Let's take a look at Meta. Here we go. So the Meta stock pretty strong. Slight pullback last week. I think it can still get to about $568 or roughly $570 per share level. That's the 1.618 expansion for this. Let's take a look at NVIDIA. And here we go. So NVIDIA stock very strong. The psychological level of $1,000 per share level. There was a possibility it could still get there. Now let's actually take a look at so that's the ABCD around here, but it might actually be getting extended. So if we were to take a ABCD around here, yeah, so NVIDIA still has a chance to about a stab at the $1,000. It came very close. 975 is roughly, so at 1028 is possible. The stock is pretty strong. What we can see is it has come and tested this gap and filled this gap area, $830. That's something which we had marked from before as a possible area to pull back into, because of this gap formations. Come and fill that gap. In fact, filled about 50% of it, just eyeballing, so that's good. Momentum is pretty strong. So yeah, this stock in my opinion has still has a chance to take a stab. Now what I'm gonna do is let's take a look at this mini expansion. So the mini expansion is here. Yep, so I think anywhere between 1,030 to 1,050 could in fact the stock could in fact take a stab at those levels. Remains pretty strong. Just gone for the last 3 weeks, gone into some sort of in my opinion could be just profit taking, but momentum perspective stock is pretty strong. Now finally, let's take a look at RBLX. So the price action in RBLX has been pretty disappointing, to be honest, because we were in fact looking for this January 16th low to hold, and it did not. On the daily chart, this is what we were watching. Now this low around 35.50 is holding. That's a good sign. We could anticipate if this is held. All of this is a consolidation. It reminds me of that spring concept coming in from the work of Wyckoff. People who are familiar with that could relate to the concept of accumulation, and then you can also Google about it. Not really a Wyckoff person, just familiar with some of their concepts. So as long as that's held, the ABCD takes us to about 58.70, and in my opinion this 67.36 might be achievable, and a really important level, because if it's able to break above that, that's going to be a first indication that the stock is probably ready to move a lot higher, but it's just gone into a really long consolidation around here for a while. It's been a couple of years now. So this is what we are watching in the RBLX stock. Thank you very much for watching the video. Apologies, a little longer video. Good luck and good trading. And if you happen to like the video, and then please hit that like button. And if you like or are interested in how we look at the technical analysis using the Fibonacci retracements, price projections, and pattern recognition, then please do subscribe to the channel as well. So thank you very much for watching. Good luck and good trading. Speak soon.